Today I want to tell you reasons why shorting the euro against the US dollar is far more valuable than going long in this market. So if you personally have a trade to go long here, I'm not saying change your trade. I just want to make you see some perspectives of this market that you may have not been paying attention to. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So what I'm going to be doing is I'm going to be starting all the way from the monthly. I want to take you through the process at which I look at the market, as well as how I feel fundamental and supply and demand market traders look at the market. Now, first thing first is I start all the way from the yearly. This is 12 months of time frame. So each candle is actually 12 months. So as you can see, basically each candle is a year. Now, for things like this, I don't need to look at whether there's market structure to the upside, close to the downside, and all that stuff. I'm just looking for the very last sets of candles, maybe 5, 6, 7, 8 candles at most, and observing what in exact they are doing. Why? Because this time frame is so huge that price movement within this time frame is very, very big. So any small clear movement here is valuable to the lower time frame. Now on the yearly, one thing I can observe here is that price made a rejection around here. This was a rejection to the upside, and I'll just call this Y, meaning 1 year. And with this rejection, we expect price to move to the upside, possibly all the way to this level right here. So this is a yearly expectation for price to meet with, right? Now, if price is going to meet this level, if price is, remember, it's a conditional statement. If price is going to meet with this level, then I expect that when price comes down here again, price is going to go upstairs, right? Go to the upside, which price has done in the recent months, in the recent years actually, all the way in 2025, and price has started to push towards the upside. With this in mind, let's go down to the lower time frame. On the monthly, what do we see? Price has made its way into, like, digged deep into the rejection area and finally is pushing off. But price has come up here, and recently, mind you, this is the monthly, meaning I don't need to look at like all of this. I could look at a very few things and decide what is happening here, right? Each candle is also still very critical, as price movement is very huge on this time frame too. So on the monthly, what I see here is this. We have a formal supply zone right here, very far supply zone, and it's a good one. And price just came out of this zone. Price has gone in there and come down. Now we have alongside with it a clear rejection from this point onwards. So in my opinion, I'd say this has been mitigated, hence it has been utilized and it's no longer valuable. And then from the downside, right, the lower side, we have a demand zone down here. This is a monthly demand zone. Price has not mitigated it and price has not done anything. So the last thing price did was price broke above this resistance zone. This, you can call it a break of structure to the upside. So I'll call this a BOS for the monthly time frame. So let's make this a monthly time frame BOS. Now, where did this come from? This has to come from somewhere, right? It's most likely coming from two things, right? This is a rejection area from the higher time frame, the 1 year time frame. Hence, this rejection is no longer also valid, leaving us with these three things here on the chart. This is a monthly retest. Now, taking a very good look at the recent sets of candles, we have price breaking below clear low right here. So this is, now price has not closed below this low, so this low is still visible. It's something that we should be careful of, right? It is a break of structure. However, it's a monthly time frame. Each candle matters. When price break below this other one here, this evident low right here, this is as good as a change of character. Why is this a change of character? Well, prior to this zone, we had a very clear high right here, and this clear high, price broke above it, right? Price broke clearly above it and then returned to the downside, and ever since then price has found difficulty to go above this zone. Hence, this is, apologies for that, hence this is a rejection area This is a rejection area, and this is a break of structure to the downside. Now, with all of this in mind, we're going to look down to the weekly and see what we can determine is happening here. All of that is going to apply to the weekly. As you can see, like I said, this is the change of character here. How come is this a change of character? Well, price did one very beautiful thing. It made a high, made a low. You could call this a high because this is quite obvious, right? And it made a low here. And then it made this high, which broke both of this. But the next move price did ended up breaking up everything here. So both of them are as good as CHoCH, which is a change of character, right? They are both good as change of character to the downside. If this is a good change of character to the downside on the weekly, this is also on the weekly anyway. This is a weekly change of character. If these are both good change of characters to the downside, how come price returned up here and is capitulating again? I'll have a video up here where I'll teach you how supply and demand works. And in that video, I will explain to you how you can trade supply and demand and understand it very well. In the weekly, we have a supply zone up here, right here on the weekly. And this supply zone, as you can see right here, price has come into it. However, the rejection zone is still very active. Why is it still active? Well, it's simple for one reason and one reason only. Price has not gone into that monthly rejection area yet. Price has not returned to that area yet. Price only went into a supply zone and respected the supply zone. So this zone still stands, the rejection area still stands, but the supply zone also still stands. Now, what happened after before price came into the zone? When price took out this, when price made the change of character to the downside on the weekly, it went up with major force, creating a good weekly demand zone. With the weekly demand zone, it went into a supply zone. Now, what are we seeing here? Price has created a supply zone. How do I know this is a supply zone? It's simple. Because this week has closed, right? The last week has finally closed. That is this one right here has closed. And we have a clear imbalance here. That makes it a valuable and a supply zone. So this has been mitigated. This should no longer be on the chart. Now, just by looking at this scenario, what do you think is going to play out? Well, it's very simple. Price is already within a weekly demand zone. There's going to be a reason for price to come up to this side, or there should be a reason for price to come up to this side. And then price is going to go back and continue to the downside. The only reason price will not come down to the downside is if when price is coming back up here, that is when price is moving to this upside right here, price creates another weekly demand zone. That is the only clear reason. And it's not as if that's the only reason. It's the only clear reason. It could also not do that and still break above the zone. That is the first clear reason why this zone will be broken through. The other clear reason is because of this rejection zone at the top here. So price could want to move, or market could want to move for that rejection zone before it continues to the downside. Or we could have sudden change of situation and the market just wants to keep running upwards. And that would lead to the market not coming down. If it's coming down, it's going to be coming down for like correction. Now, those are the three possible scenarios we have that's going to happen. But again, if you look at all of those scenarios, one thing we're seeing here is there's a higher tendency for price to do this. And that is the very first move we are hoping for price to do. Now, this is where fundamental analysis finally comes into my trading scheme. And this is where why do fundamental analysis come in here? Well, for me, as a swing trader, fundamental analysis is used to understand what is going to happen in the following days. Not up to the week or so, but in the following days. Meaning, with the fundamental analysis, I can say, okay, in the next 2-3 days, I expect price to do this, this, and this. It's an expectation. It doesn't mean the market is going to do it. It is an expectation, as I said. Now, moving on to the daily. Before I analyze this daily chart, this is where I carry out fundamental analysis. And this part is where I come to this table. So right here on this my dashboard, the euro against the US dollar is slightly bearish. Without looking at the sum data, the sum product and the variance of the market, I'm going to start with the yield. The yield is more in line for the dollar than it is for the euro. The high impact data is leaning towards the US dollar than it is for the euro. In the recent 14 days, it has shown more move for the for the US dollar than for the euro. The technical direction is now bearish, and the technical direction is more like where is price compared to the 20 SMA. Is it below? How far below? It's far below the 20 SMAs. The non-commercial traders are looking to buy more US dollar contracts. Or rather, they had more long contracts for the US dollar than they have for the euro. While the retail traders, those guys are quite confused. I'm going against them at 53%, which is slightly bullish. So basically, from everything all the way from yield to non-commercial trading, I should be shorting this market. And if you look at it, that is how this sum product comes about, telling me that the market is more towards the downside for the US dollar. The variance, on the other hand, is quite neutral, meaning that the data is not all the rest data, the yield, the impact data, the technical direction, non-commercial direction, trade, and the retail trade contracts are not far from each other. That is basically what the variance means. Now, I want to understand where is all of these miracles coming from, because I have given you a clear understanding of what the market is doing without telling you how all of this came to be. Well, let's take a good look at how all of this came to be. We'll run a market check. We're going to start with the euro, and I will just do this side by side so that we can make it quite fast. We're going to start with the euro, and we're going to compare it against the US dollar on the right. So the US dollar is being on the right, the euro on the left. Now, by mere looking at both screens, right, by mere looking at the overall score, we can see that the euro is far less, or not really far less, but it's less than the dollar. The dollar being at 61.2% and the euro being at 48.3%. But in the recent 14 days, and this is how it actually works. So if the recent 14 days is bullish, I expect the overall to start to tilt towards the green side, or rather tilt bullish, right? And if the recent 14 days is negative, is bearish, obviously the overall data is slowly going to start tilting towards the bearish side. So basically what the 14 days is telling us is the degree at which this direction is being kept, or rather the momentum at which this market is moving, the direction this market is moving overall, right? Now if you look at this overall, this market is moving bearish, and it is already in a bearish stance. So basically the European economic data as of recent has not been so good for it. While for the US dollar, the overall data, the recent 14 days has been real good, meaning over a period of time, if it continues bringing out good news, this overall score is going to keep rising. How did this news come about? Well, if you look into the recent news releases under the employment data for the US dollar, we have very good farm payroll data, and the unemployment rate came out neutral. The economic activity for the US, the PMI is good, the manufacturing PMI in particular. The services PMI came out bearish, and it's not that bad, but the core retail sales is neutral, while the retail sales year over year is bullish. And then for inflation data, the CPI and core CPI is real good, really good. You can see how bullish they've been, while the core PCE price is neutral. Then, if you look at what the COT data says, the non-commercial traders and the retail traders, the leverage fund traders, right? The yellow line stands for what the main sentiment of the non-commercial traders. And what we have here is the recent week, which is the 12th of May, the 19th of May 2025. You can see that the recent week right here, sorry, I don't know how come it's arranged scattered like this. I think I'm going to sort it by date, so it makes more sense. Yeah, so that's it right there. So the recent 14 days data is having a more bullish stance by the non-commercial trader at 71%, and then the retail traders also still being at 72%, meaning the retail traders are shorting the market, and I should be going long against the retail traders if I want to go long. Now, what does this mean? If squeezing the retail traders is what's going to happen next week by going long, this is what's going to happen, right? The market is going to move up into this weekly supply zone. So that is me going long and squeezing the retail traders in this market. And it's not me like personally doing it. It's more like the commercial trade, the non-commercial traders, the heavy traders, the heavy speculators trying to squeeze the market for as much profit as possible. They could be going long in this market next week to squeeze the market into the upside and then finally sell this market to the downside. It depends on what the economic data next week is doing, right? Really depends on all of that. Now, what is the possibility that this can happen? After looking at the fundamental situation of the US dollar, right? Let's take a look at the euro. Let's see how there's a possibility of that playing out. Well, for the euro, we've not had any central bank data this month, but for every other thing we've had data. And what are we saying here? Well, for the month of May, I'm just going to make this month so it makes it far more easier for us to easily read all the data quickly. And for the month of May, we can see that the employment change recently has been quite good is bullish for the euro, but the employment change year over year is bearish, meaning this year against next year, it didn't meet up. The economic activity, recent economic activity has been bearish. The manufacturing PMI and the services PMI, even their GDP data was neutral. Their retail sales is the only place where they had like good economic activity this month. And in their inflation data, they've just been meeting targets, not exceeding and not missing it. They just meet targets. So they've been neutral in terms of inflation. So this brings a slightly stable economy, but not so stable because of the bearish manufacturing and services PMI, as well as the bearish employment change year over year. Now, if you look at the COT data, we have good moves to the upside, right? Good moves. But in the recent day, right? The recent day, if you look at it against the recent time, the long trades increased, the short trade reduced, so they're actually going long in the euro. However, the degree of their long compared to that of the US dollar is at 51%. So you can see that the non-commercial traders are at 51% here. In the other place, they're at 72%. So it means that there is more strength in the US dollar than there is in the euro. And why do I say there could be short squeeze in this market? Well, it's very simple. Most fund traders are trying to make as much money as possible. They could start the week with that squeeze, move up as much as possible, and then move to the downside. How do you see that? Well, on the daily, this is where we come back to the chart and then finally decide what to do next. On the daily, we do have a good demand zone right here, and you can see price is beginning to slow down as it comes into this zone. You can see that already happening. This was the beginning of the last week, 18th of May, and price started to slow down. Unlike what happened the week prior where you saw a sudden drop. Price has slowed down because it's now within a weekly supply zone, weekly demand zone, and it's now getting close to a daily demand zone. Now, when price gets into this daily demand zone, I do expect some reaction out of it to the upside, which is what we're seeing here. But at the upside also, we have for ourselves right here, right? We have a supply zone right here. This is the first supply zone we have on the daily. And as if this was not enough, we also have another supply zone right here, which is something you should be very, very watchful of. So we have two daily supply zones around here. In fact, this being the most active and the most possible one. This is a weak supply zone on the daily, but it's still there nevertheless, right? You cannot say because it's weak doesn't mean it's not evident. And it's active. They are waiting for any market to come in here or that price to come in here, and the others may come flying in. So we could see market push to the downside and then move upwards to the down before moving down, or we could see market just suddenly capitulates even lower. And there's no better way to check this than to go into the lower time frame and see what the market is doing. And what we see here is a very, very simple show of what I was saying, right? We have price creating this low to this high, to this low, making this high. And now it's made a lower low and it's making a high that is not obvious yet. But one thing you observe here is this. We have the same scenario down here as we have in the yearly. What do I mean? So even though price has not met a daily demand zone yet, right? It has not met a daily demand zone yet. However, it's beginning to show you those signs of weakness by creating rejection zones at the bottom, clear cut rejection zones, and that rejection zone is actually being respected, as you can see here. Price may do one last move, which is go down to then push to the upside, and we will see that when we start to look even further into lower time frames. As you can see, price is no longer creating good supply zones at the top, though this is the last supply zone it created before the end of the day. This is the last supply zone it created at the end of the day. However, it has utilized the demand zone here. As you can see, the demand zone here has been utilized by this move to the downside. And what does that mean? Price now has a more probable chance of clearing to the low side, to the downside very easily. And if it clears to the downside very easily, where is it going to go? It's going to go into a daily demand zone that is waiting for it. So I hope this taught you something new about the way EURUSD is going. Like I said, there's a high tendency for price to move upwards than it is for it to continue downwards all straight. But then again, I may be wrong. This is trading, and this is me sharing my personal opinions and personal view of the market, and it's by no way, shape or form a means for you to take as a financial advice. It's just pure educational and concept driven, teaching you what I see on the chart personally based on personal opinion and personal analysis. So you do have to do your own personal analysis, do your own due diligence, and check out everything I have said in this video against what you're seeing in the market before you place a trade. Trading can be risky and you may lose money. If you learned something from this video, do well to share this video with someone else who might find this very valuable to their trading career, as well as do well to hit the subscribe button and hit the thumbs up, and drop a comment at the bottom of this video. Let me know the market you're looking at and how you feel about the market, the bias, possibly your own analysis. I'd love to read your comments. See you all in another one. Peace.